All right, let's talk about Bitcoin and cryptocurrency, the Bitcoin cryptocurrency markets. What is the truth? What's really going on? So there's a lot of things going on. We are in a controlled deleveraging, deflation of the Bitcoin and crypto markets. Prices are hitting levels that many people never thought that they would see. Bitcoin has now gone below a previous all-time high after setting a new all-time high. But that's happened before. A lot of people in the space say that's never happened before. It couldn't happen. It's happened before twice. So we'll take a look at that in a minute. But first, let's take a look at what I mean about the truth about crypto. So the narrative in the space is that these events that are happening with 3AC and Luna and Celsius and all of those things that are going on are taking down Bitcoin, cryptocurrency, altcoins. That these are the things that are causing the sell-off in the market. Miners, that the miners, are crashing prices because of their leverage in terms of borrowing to operate, energy costs, all those types of things. So the miners are selling. That's what's bringing the market down. We have news all over the place about Bitcoin plunging below 20K. And, the lawsuits are now starting. Companies are failing. And as Warren Buffett likes to say, when the tide goes out, you see who was swimming without any shorts, and these types of things. Bear markets, deleveraging events, sell-offs in any market, whether it's traditional markets, whether it's real estate, whether it's a business, a company, whatever. When the cash stops flowing and the profits evaporate, that's when all of the poor operations and problems and scams are exposed, right? That's how Bernie Madoff got caught, was because of a bear market. Bernie Madoff would have never gotten caught. If you don't know who Bernie Madoff is, go look that up. He was the largest Ponzi scheme of all time. And, there are several of those types of things going on in crypto, a lot of illegal operations, Ponzi's, things like that. And they all get exposed in a down market because there's no new capital coming in to pay off existing investors. And when values go down, people get margin called, people have to liquidate and things like that. And one of the biggest ones that everybody's watching, obviously, is Michael Saylor. And we talked about that the other day. And, the thing with that is, Michael Saylor came out and said that, he doesn't have to worry about a margin call, that he's got plenty of Bitcoin to pledge. But the thing is that he didn't talk about is, with the value of Bitcoin where it's at now, he's going to have to pledge twice as much to cover the devaluation of the collateral that he's already pledged. So it's a little bit more significant than he's letting on to be. And right now the price is holding up above what he's saying his margin call level is, or actually it might be at the level now where the margin call comes in below 19,000, I think it was. So that's the first step, having to pledge the bulk of your Bitcoin. And then as the price drops, they will liquidate that collateral to maintain that loan to collateral level, whatever that is. So that's, when those things start to get liquidated. And then, of course, there's the company loans, which that's a whole different ballgame. He says that those are non-recourse, non-guaranteed lines of credit to the business that have, maturity dates out in the future. So as long as the company can continue to service those, that's not a big deal. The biggest risk of the Bitcoin was what he pledged for the loan, and he's going to have to back up with additional double the collateral because the value's dropped, which is what's happening to these other DeFi platforms, right? It's basically the same thing. He's done what some of these other people did, and and now the margin calls are going to come in and the chips start to fall. So what is really behind all this? What's really the catalyst? It's not that these things are happening that's bringing down the market. What it is, it's inflation that has triggered a response by the Federal Reserve and central banks around the world, because it's a global issue. Inflation and recession concerns are global issues right now. So that's triggered a response by the Federal Reserve and central banks around the world to try to get inflation under control by pulling back on quantitative easing, reversing course going into QT, and raising interest rates. That whole problem was created by central banks, the Treasury, and the Federal Reserve going all the way back to 2008 and 9, when the great financial crisis happened, with the intervention of the Fed and Treasury coming in, propping up companies, pumping liquidity in the markets, creating QE, which is when Bitcoin was born, right? In a response to that, because the government was bailing out banks, bailing out companies, and pumping all of this liquidity in the market. So that's why Satoshi created Bitcoin, was in response to that, so people could be their own banks and not have to be at risk to the devaluation of the currency that was beginning back then. And we've been on this path of basically low interest rates and QE since 2009 during the great financial crisis. And then more particularly, we doubled the amount of liquidity in the system from the bottom of 2020 on. So that's the catalyst. That's not the catalyst. That's the issue that is the problem that ultimately at some point has to be unwound and has to be undone. All that liquidity has to come out of the system. Interest rates can't stay at zero forever because all of that creates the inflationary environment. It was amazing that we didn't see inflation up to the recent point that we've seen it. And I guess the pandemic exacerbated all that because of the supply chain disruptions and issues and things like that. So the deleveraging, repricing, and now deflation of assets, because we are in and have been in, the Fed, the Treasury, and central banks around the world, governments around the world, have created the largest asset bubble in the history of the world over the last 10 to 15 years. That's what's happened. We've created the largest bubble in all assets all around the world. And when I say assets, I'm talking all classes, the markets, the traditional markets, bonds, equities, cryptos, real estate, companies, venture capital, equity capital, private equity. All of these markets, classes, and assets have been in a mega bubble. And it has to correct, right? Because markets move in cycles, right? Peaks and valleys. You have really good times, you have really bad times, and you have really good times, you have really bad times. So you have to reset. And we go through these cycles, and it takes time. So these things don't fix overnight. They don't happen overnight. We're just at the beginning. The liquidations are just beginning. The deflation of asset prices are just beginning. And there's nothing that the Fed, the Treasury, the central banks can do right now to step in and prop things up. I mean, they can prop some companies up and things like that if they choose to or have to, or if there's a major bank failure or something like that. But the banks aren't at risk. The crypto market especially does not pose any systemic risk to the economy as a whole. And there was an article on that somewhere, maybe it was on CNBC, that was talking about risk and exposure of the traditional markets and economy due to crypto. And it's what was a $2 trillion market cap. That's just a valuation on paper. There was no systemic exposure to traditional markets just within the space itself. So nobody's coming in to rescue crypto. That's not going to happen. Traditional markets, depending on how bad that gets, we'll see, if and what the Fed and Treasury can do, about that. So, that's what's going on. So it's these things that are now triggering liquidations, bankruptcies, failures of all these other protocols and DeFi schemes and things like that are out there. As the prices come down, they're unsustainable. And I never really understood the DeFi space, where you deposit your crypto for these double-digit returns that they give you by either taking their money and recirculating and rehypothecating it throughout the system, or printing inflationary tokens and just giving them to you to unlock at some point, like a hex or something, that at some point those have to be unlocked and sold, that just throws more and more of those tokens on the market. So anyways, those, that's what's really going on. So where are we at now? What do we look for? Bitcoin now is, as I'm doing this, 18,200. It's wicked down to the $18,073 level. So it's flirting with the next level down. So where is it going to land? Ethereum's down to $930 now, and getting closer to that $600-700 target that I've been talking about the last couple of weeks. Bitcoin's getting closer to that $14,000-15,000 target that we were talking about. But let's look at the last time we had this little area here where Bitcoin dropped, consolidated, popped up, and dropped. Okay, Bitcoin drops, consolidates, pops up, drops. Okay, so this last one was about a 25% drop over here a few days ago. So where are we at right now from a percentage point drop? Right now from, hang on, let me do this again. We want to go from right here. Yeah, right here. So right here from this area down 25%, we're only at about 13% right now from that. Wait a minute, let me see what's going on here. I'm looking at this wrong. Here we go. I've got to measure it from here. That's right, consolidate pot drop. Okay. So right now this has dropped basically, and I am no technical analyst, but I like to use charts for trends and things like that. 25% puts you down around, that $17,000 range plus or minus. So, that's kind of what we're looking at right now. If this drops 25%, like this area over here after the consolidation, that could be the next base to consolidate somewhere around 17,000. What we haven't seen is we haven't seen real panic in the market yet and real capitulation yet. This is still an orderly unwinding of the markets that's going on. There's a lot of talk about what's been happening with Bitcoin dominance here. And, Bitcoin dominance has been down the last few days. ETH dominance has been down for the last few days. A lot of talk about the Bitcoin, altcoin pairings and dominance and things like that. Doesn't really matter. It's insignificant. It means nothing. It's all about the dollar, right? That's what everybody's trying to do is earn currency. So, those things really don't matter at this point. The market's deleveraging. Bitcoin's dropping a little bit quicker than altcoins. You had a little bit of a bounce in some of the altcoins. These are just liquidity grabs. And some of them can be, kind of set up, sucking people in and then dump on them. So, altcoins are easier to manipulate, takes less money. So they're going to bounce a lot of times a little bit harder than, Bitcoin and Ethereum will because of their market caps. So Bitcoin's now, down to a market cap of, whatever it is right now, 300 billion plus or minus, where, it's much easier to manipulate. So, interesting times now. We'll take a look at the daily here. And again, we're in this area here that, this market structure here, that if Bitcoin breaks through, then, that's at $16,000 level, then you're going down to check other levels. But it looks like it's definitely wanting to head straight there and kind of get to those levels. And again, this now is going to trigger some, potentially trigger some more intense liquidations. So the other thing that we've been kind of keeping an eye on is the Bitcoin hash ribbon indicator. And as the prices drop lower, the miners are in even more trouble. They have to turn more rigs off and sell more crypto. Their loans, have some covenants in them. They have to maintain a certain amount of balance or pledge more assets. So they'll probably just liquidate and pay loans off or do whatever they have to do to operate and continue operations. And there's some major companies out there. So this isn't like, Bitcoin's going to go away and, it's going to go to zero and all that kind of stuff. We've seen it before. And let's go take a look and, we'll go ahead and get on the weekly here. And, a lot of talk about the 200 weekly moving average. The Bitcoin just kind of blasted through now and is well below any levels that we've seen in the past. And, this is the other thing in terms of, Bitcoin, all of these rules of the past, like I talked about, we'll look at in a minute, the previous all-time high kind of thing. That we talked about, but these rules that whenever it breaks the 100, it always goes down to the 200, and then these areas that it never really broke below the 200, and where it would ultimately stop and consolidate. All of those rules, all of those historical trends of Bitcoin, like the 85% drawdowns, never going below 200, week moving average for a long time, all that kind of stuff was all a highly manipulated market by the Fed and central banks around the world, right? This is where all that liquidity was. So this is a very different market, very different environment. The Fed is not there to rescue it, prop it up. And there's a lot of denial out there thinking the Fed's going to stop, they're going to pivot, they're going to do whatever. They haven't even started yet. I mean, what they've done is is the tip of the iceberg. Inflation is real. It's a problem around the world. It's global. They can't stop. They have to continue on. They're not going to stop anytime soon because this is a real problem and it's not going to be contained anytime soon, especially going into the summer when you'll typically see the most inflation, that you're going to see. So the Fed's just beginning. We have not yet begun to see the Fed fight, right? So let's talk about where Bitcoin has gone below a previous all-time high after setting a new one. Well, right here. Bitcoin set an all-time high. Now, I know that people are going to say, oh, that's the 4-year cycle or whatever, but hey, Bitcoin set an all-time high at 64, set a new all-time high, broke below it. That wasn't a 4-year cycle, but it was an all-time high followed by a new all-time high or double top. That may or may not count. People aren't going to want to count that. But if you go back, the same thing happened back here in 2013. There was an all-time high here, new all-time high, price broke back down below it right in this area. So, rules and memes, whatever. it is what it is. It doesn't really mean anything. We're in a different environment now altogether. But, these 85% drawdowns that we've talked about, the Bitcoin's seen in the past. And, if it does from wick high, major market top, 85% drawdown, I mean, that's $10,000. So as Bitcoin gets closer to these levels, like right now at, $18,100, 10,000, is looking a lot closer and a lot more realistic than it did in the past. The question is, if it gets there, how low does it go? So what's happened here, back when I was looking at this, this major level here of 29,000, and my question was, it didn't break 29,000 here. This was a different environment. This was a Fed put environment where liquidity was coming in, interest rates were zero, anybody can borrow money, a lot of stuff going on. Zero here. I told everybody, get out up here in November, because the Fed said, stop. This is where the Fed said, to his own board, you're not buying stocks. To Congress, you're not buying stocks. You're out. This is where the Fed said, game over, party's over, turned on the lights and said, everybody go home. So, this has been a fairly steady, orderly unwinding and, deleveraging and repricing. There's the Dow, the NASDAQ, all since that happened. And we're nowhere near done on these markets either. We're getting close to the pre-pandemic levels, but at least until we get there, we're nowhere near done. And it could get much lower. It could get closer to the bottom levels of where we were in 2018, because these were all-time high, exorbitant levels. Where the Fed stopped the first time and then pivoted right here because the credit markets cracked. Again, they can't do that right now. So where does this land? Does it land at pandemic? Does it land back in 2018? Does it land at the lower levels of these areas where the deleveraging was, trying to take place the first time? So we don't know. Nobody knows. We don't know exactly what the economy is going to do or when. We just know that it's going to take time, that the Fed can't turn around. They're not going to. There's still a lot of denial in the space right now, especially in crypto. A lot of people in denial in crypto, thinking that this is going to turn around and bounce 30% and go to new all-time highs, and we're going to see an altcoin rally and all that kind of stuff. And while it is possible, because anything's possible, we saw what happened over here, but a very, very different environment. All of these rules, all of these things in the past were all existed in a very different environment. But, anything's possible. The question is what's probable and what's most likely to happen. So given what's going on in the space with the contagion, with all of the lawsuits starting, with regulatory, attention from the regulators in the space and all the things that are happening, it just seems that the most probable outcome right now is a continuation down to try to find a bottom and see how low this goes and, how long it stays there. And, what we've seen in the last time is, from the peak of, 20,000 back in, 2018, 2019, once it really finished that final capitulation phase, it kind of stayed there before, the pandemic. This is where the bull run would have started. It stayed down there for, over a year. So depending on what happens and how long it takes for the economy to kind of turn around, and it will, and for inflation to get under control, which it will, the Fed has to destroy demand. That's the only way you can control inflation. You can't fix supply. The only thing they can do is destroy demand. So supply fixes itself, job market fixes itself, and things, correct. I made a housing market video earlier talking about that, and that's part of the picture. So as these things work themselves out over the next 6 months to a year to 18 months, economists are all over the map with it, and, fund managers are all over the map with it. Analysts are all over the map with, how long is this going to last? At least until the end of the year, in terms of getting to a bottom. It's not going to happen overnight. I mean, we could just shoot straight down here. Again, a lot of things are possible, and it's gotten down here, kind of quick and working its way down. So until we get there, we'll just have to wait and see, how these things play out. But, could get down there and kind of bounce around and consolidate these lower levels. But, Bitcoin's not going anywhere. It's not going away. And what I was getting back to here at this 29,000 level, that was a level where things took off last year. And, my thinking was that, maybe institutions would jump in here and, this area would be supported. Problem is, with the markets doing what they're doing, the macro environment, the institutional investors can't, okay? They cannot come in here and jump in with this asset doing what it's doing. That's too much risk. They won't touch it. They won't touch it with a 10-foot pole. They won't even allocate, half of 1% of their portfolio into this market right now. They're all waiting to see where this lands. So, it's got to get down to these lower levels and find a bottom before the institutions come in, before retail comes back in. The other thing that drove a lot of this was the stimulus, right? You had not only just the liquidity by the Fed pumped into the market, zero interest rates and all that, but you had people getting real checks. You had, inflation wasn't as big of an issue. There was a lot of stuff going on, where people were able to, buy, put automated buys in place and, use stimulus checks and PPE and things like that, and SBA loans. I mean, a lot of that is what has gone into this market, trillion, hundreds of billions to potentially, hundreds of billions of dollars during this period, just from that pandemic, stimulus that was put out there. So as inflation's hit and people's balance sheets are taking a hit and people are having to start to cut back, they're not buying automated, anymore at scale. Some people are doing the DCA thing and, whatever. Everybody's got to figure out what their own system is in terms of what they're going to do, whether they want to buy and, kind of, if you bought up here and you want to try to, lower your average on the way down, that's your decision in terms of what you want to do. I'm not going to tell you what to do there. You got to make your own decisions there. But that has dried up. So there's no PPE, there's no stimulus. A lot of people are having to cut back. Mortgage rates are going up, all that kind of stuff. Rent's gone up on people. So they don't have that extra $100, $200, $300, $500,000 a month that just automatically is just buying Bitcoin on autopilot or buying altcoins on autopilot, those types of things. So that's affected things a lot. And then the DeFi lenders, where you can take your coins and stake them and borrow on it and go buy more. That's unwinding. So there's a lot of leverage in the system that's unwinding as well. So, that's what's going on here. Now, the good news is this is all positive. It's all going to hit, bottom at some point, consolidate. And when we get there, we will know it. And, I'll let you know and I'll make some videos, but we're going to know it. And when it's bull market on again, we're going to know it. And that's when, those generational opportunities potentially could be created when the Fed says, hey, we're done, we're stopping. And, and if they potentially reverse course and start another QE program or, whatever, given the environment, whether they can or can't, then we'll see where markets are going to go from there. But these levels were hit here largely because of that, multiple trillions of dollars pumped into the space. This level here was hit with just general stimulus QE and just, mostly retail narrative. So we know easily could get back to 20 grand once this thing settles. If it drops down to whatever, 3,500, 10,000, wherever it goes, somewhere in that range. And we know that at bottom, worst case scenario bottoms, well, this was the Fed jumping in. So we don't know how low Bitcoin would have gone if the Fed hadn't jumped in, but there was no Fed jumping in at scale back here. And, 2018, so that bottom was, 3,000. So what you have to say is, again, everything's possible. And you want to hear all sides and all opinions, the ones that are saying, hey, we're just going to go back to do all-time highs, hey, if they've got data to back that up, you want to hear that. And then the ones that are saying these, lows, you want to look at that too and kind of weigh the options because, anything is possible, but what's most likely and most probable? Well, we know what happened here, that $3,000 number was a number that was well supported. And I think that's where you would see, more institutional, capital coming into space, more retail coming into space at, those levels there, because we know you're definitely going to get back to 6. You're definitely going to get back to 10, most likely going to get back to 20. Will it go beyond there without a Fed intervention, stimulus, things like that? We don't know. We don't know if it can get back to these levels without all of the stimulus, all of the, leverage and all that stuff that was pumping the space and things like that. But we do know, that these 20,000 levels, those were hit without this amount of stimulus being pumped into space. There was still QE going on here, but it wasn't like this. This was $2 trillion just thrown into the space, people getting checks, PPE, individual checks, all that kind of stuff. Over here, we've got, record high inflation, or at least, what we haven't seen in 40 years. We've got rents at the highest levels we've ever seen, food, restaurants. I mean, shoot, I ate lunch with a friend yesterday. It was $21 for, a barbecue restaurant just for me. It's ridiculous. Just prices are going up everywhere. But yeah, I had smoked salmon with coleslaw and a drink, just an average casual barbecue place. It was $21. I can afford whatever lunch I want, but I'm not doing that. That doesn't make any sense. That should be $15, so that's kind of where we're at. So, people have to start making decisions in terms of, what kind of capital they have, where they're going to spend it. And they're certainly not going to throw it into Bitcoin when they have to pay rent, when they have to feed their families and things like that, because they don't have it left now in this environment when they did over here. So, once we get to that point and we get to the bottom, we get out of this, we're in this denial phase a little bit right now. We haven't seen real panic selling yet. I think if we crack, well, we're getting close. If we crack below, 18,000 and we start getting, I think once we lose 18,000, you might see more of some accelerated selling here today. Ethereum's down to 900. Let's take a look at Ethereum and see what's going on there. Ethereum has broken major market structural support. So next stop for Ethereum is, $700. So, Ethereum's on its way. It's going to get down to this, that's its next stop is about $700. So we're $200 away from that on Ethereum, headed to 700. And, Bitcoin's on its way to 17. But again, the next structural stop for Bitcoin is, well, we've broken that one, right there. So there's a little bit of support at 16, right around this. You're looking for this market, structural market support. So there's some stuff around 16, 17. So if Bitcoin breaks 18,000, starts dropping in there, this could be, continue, and that could trigger some spiraling, liquidations, margin calls, things like that, and then it could accelerate from there. But that's where we are. That's, what we are looking at, why we are where we are. This is not something that was driven by all these other things that are happening. All of these other things that are happening are a result of what's going on from a macro environment, from the Fed getting out of the game, from, what the central banks and Treasury did to begin with, which is why, Satoshi came out and created Bitcoin in the first place. I'm not a Bitcoin maximalist, but I do know why it was created, what it was intended to do. And, it never fulfilled that purpose. What it has become, what Bitcoin is and what cryptos are highly speculative risk assets. That's what they are. That's what I've said all along. People, you may agree with that, you may not agree with that, but it is what it is. And that's why we're seeing what we're seeing. And that's fine, because there is a need for that. And a lot of people made a lot of money. And unfortunately, a lot of people have lost a lot of money too. So the cycle is just the cycle. We've seen it before. And it will ultimately bottom out, consolidate, and go on for another run. The question is going to be, how far does it go next time? So we will have to just wait and see. These are the things that I'm looking at, and I will see you on the next video.